We've seen real estate, of course, in other companies taking a bigger hit in light of people and their liquidity being distressed.
Yeah.
Have you on your end perhaps seen clients who are experiencing the same? And I was talking to the CEO of Home Africa just the other day, and he was saying that they've had to reorganize how the payments are done, especially for clients who ordinarily might have not missed out in terms of servicing their payments.
What we've seen is, just as there's been a 40% reduction in new sales, our monthly collections have come down to 60% of what they were pre-COVID. So we take this to be temporary.
Okay.
In fact, in the month of June, this month, we've seen a pickup. So June 10th, compared to up to May 10th, we are ahead. So the worst was in May, April, May, largely also because of the panic.
Yeah.
People did not know just how bad COVID was going to be.
Yeah.
And how deep the lockdowns were going to be. So we've been fortunate. We've also not seen anybody withdrawing so far. And we're making new sales. I think because of the segment of the market that we're in, the impact has not been as huge. There are obviously asset classes that are affected. If, say, we were largely in a rental space, that is affected because people don't have recurrent cash flows.
Yes.
So, real estate is a big asset class. Sort of somebody talking about media. The impact of COVID on the media space is different between people in print, digital. So, real estate is very broad. If, say, you're in hospitality, the impact is different. So in our segment of the market, especially what we are focusing on, there's been an impact, but it's been less significant than other sectors.
Okay. Yeah. And in your assessment, how impacted has the education front for you been, especially with the closure of the schools? But there's some hope that schools will reopen in September. Yeah,
we have an investment in the education sector, service. The impact has been that obviously students cannot come to school.
Sure.
So we've had to shift to online learning, and the participation there has been 100%. For us it was easier because service is in 20 other countries, and in some of the countries in the US and in Europe, which went into lockdown earlier and schools had closed earlier, they had already gone into the online learning mode earlier. So when Kenya happened, because they have an international platform, it was easy for them to sort of plug and play and carry on. So that has been the impact. It's been more in terms of the mode of delivering the curriculum. In terms of loss of students, we've not had loss of students. Actually, we've had new students, also largely because what we did when we came in, the market we picked up was offering an international school education at a significantly lower price. So I think as parents drop off from the more expensive schools, they then come into a school like Service, which is offering comparable, if not better standards, but at a lower price. So you sort of have a more resilient business model.
All right. Yeah. So there's, as much as there's a slowdown, there's, of course, if you look at the forecast, things will eventually pick up. That's what I'm getting.
Yeah, things will. And Abi, what I always tell my team, focus on your circle of influence. COVID is happening. That is a concern. Let's keep it in the world, in the domain of concerns. Let's focus on what it is that we can do to take advantage of this opportunity, because they're definitely going to be winners. There are going to be losers. There are companies that are going to emerge where they were. So that post-COVID, you emerge in a better position in the marketplace than you are when you went in.
All right. And perhaps as we wrap up, talk to us about new areas of investment over and above what you've already specialized in your portfolios. What do you see, say, post-COVID? There's been a lot of demand for ICT. There's been the medical sector. We've clearly been exposed as a country, as a continent. Are you looking perhaps at any investments along those lines?
Yeah, we're looking at a range of sectors. We're looking at some interesting opportunities in distribution, in healthcare, even in agriculture. But these are businesses that have strong franchises with their customers. Mm-hmm. Because what makes a business strong is the quality of the relationship with the market base and your market share, and then the margins you have, and your ability to convert those sales into cash. Because if you have a very long working capital cycle, mm-hmm. Cash is king in the business. Mm. So sometimes you find very strong businesses, but very thin margins. Mm. So it means that you don't have the resilience to withstand a shock, because your margins quickly go, or high reliance on mm-hmm. a few customers, or inability to quickly convert to your sales to cash flow, and therefore requiring a heavy capital structure mm-hmm. from a return on capital perspective. So we are looking at a range of companies. We're having valuation discussions. These things take time to conclude. Equity investments are not like debt investments where you conclude fairly quickly. Mm-hmm. But for us, what I've found is that it is more company specific. The investment decision is more entity specific than sector specific, because the range of performance between a mediocre company and a great company in the same sector in our region is very big. Mm-hmm. And so the idea is to get the best in any sector. So those are the conversations that are going on. We obviously have appetite to make new investments. So and we have a long-term view. So it's about getting the right fit, which we will. But even in the interim, we are earning 12 to 13% on our capital. So it's not a bad return. Yeah.
Okay. Yeah. And perhaps as we wrap up, Mr. Mworia, it would be unfair for me to end this interview without asking you the recent acquisition by your chairman, Mr. Chris Kirubi. When you look at his shareholding in the company, talk to us about the significance of that acquisition of the shares, and what does it mean for him really as a chair?
Yeah, I think in terms of background, there's a CMA, there's a requirement in the law mm-hmm. that once you get above 25%, you must either make a takeover offer or get an exemption from making a takeover offer for you to increase your shareholding above 25%. Mm-hmm. So Dr. Kirubi got above 25% a few years ago, and he got the first exemption, which enabled him to come to the market and increase his shareholding. But he was given a limit of up to 30%, which he built over time, because you don't go to the market and buy the shares in one go. Now at 30%, you need to go back for another exemption to move now from 30 to 35%, which fortunately he also received. And I think it's several things. I think one, it is his confidence in what the business is doing. And he's had that confidence for a long time. Mm-hmm. Number two is, if you look at where the price is now and where it has been for a long time, at sort of 25 to 30 shillings, and you look at where net asset value per share is, which is 71 shillings, mm-hmm. and that 71 shillings is after impairing a number of assets.
Correct.
Which are still there, but sort of they have been impaired. Mm. Then you look at where the dividend yield is, even relative to other companies.
Yes.
It's a very attractive buy. You better buy Centum than go to buy the underlying businesses. Mm-hmm. So for him, I think he sees it as a long-term investment in his portfolio, where you can generate both cash flow and significant potential for capital gains. Because you can imagine now in a market recovery, companies like Centum, which are already deeply undervalued, are the ones that might come out a lot faster. So I think it's a very positive signal when you're a major shareholder who understands the inside of the business, mm-hmm. and who is quite a savvy investor, and makes a decision that he would like to acquire more shares, when he has a choice of making many other investment decisions. So it's for me very encouraging and a very strong validation that we're probably doing the right thing.
Okay.
Yeah.
And of course, we definitely will be keeping an eye on just how this pans out. Some say it's a very strategic investment by him.
No, it is. Centum is one of his core holdings. And even if I had the resources, I would buy more shares. I've put in a lot of my own money into buying Centum shares. I think they represent very significant value. Yeah.
All right.
Yeah.
And I hope he's keeping well, is responding well to treatment.
No, he's keeping very well. He's actually doing very well. He's been a very active participant in the board committee meetings and the board meetings. He's not missed a meeting. He logs in. He's active also on email. So he's a very active board member.
All right.
Yeah.
Thank you, sir.
Yeah, fantastic.
Okay.
Thank you.
Well, quite some interesting sentiments coming out there from Dr. James Mworia, even as he talks to us about how the business has been able to survive through the pandemic, and is quite bullish, saying that things will pick up once the COVID-19 situation is contained. And that's why we want to bring it to a close on this week's episode of The Trading Bell. Remember, you can engage with us on our social media platforms appearing at the bottom end of the screen, and definitely always remember to keep the key guidelines in place. Always sanitize, social distance, wash your hands. From me and the entire team, it is bye-bye. See you next time.